Hi, everyone. My name is Dustin Miles. I'm with Momentum Multifamily, and I'm excited to have Brent here today. I don't know how long we've known each other, but it's been a little while. So, always great to see you. Anyways, I'll hand it over to you if you want to introduce yourself, but just really appreciate you being here.
Awesome, man. Yeah, super pumped to be on and humbled and grateful as well. So two recovering engineers here, just making it work. So
Yeah.
yeah, I don't know when it was back 5 years ago or something, maybe
Mhm.
six, seven.
Yeah. Yeah.
Yeah, something like that. So definitely have been grateful for the friendship, and the partnership and everything that we've formed along the way too.
Yep. For sure. Absolutely. Well, cool. Yeah, I guess we'll, yeah, just kind of hop into it. So I guess kind of along, those lines, how long have you been investing in multifamily and just kind of curious about your journey.
Yeah, no, that's a great question. So 2017 is really when I got into the multifamily space. Maybe end of 2016, really started to look into what real estate asset class I wanted to jump into. It was kind of self storage, multifamily. I was really
Hmm.
honing in between those two. Now I will say self storage, you get a lot less tenant problems, than we do, but maybe you have different challenges, right? Supply demand and some different upheaval. So back 2017, really got into the multifamily space, multifamily sector, and that's where we started investing, and then got into actively buying, and kind of fast forward to today, we've been able to own, operate, and manage just over 3,400 units
Oh, wow.
across 6 states, and now actively in Florida and Texas. Kind of those other states we're not managing anymore. Not those cycles are over.
Yeah.
And 7 exits, and yeah, it's been definitely been a great multifamily journey. I mean, it's funny, we record this in early 2024, and everybody knows real estate kind of comes in cycles,
Hmm.
and we are probably at the bottom of this cycle. Lord willing, that's where we're at, the
Yeah.
bottom of the cycle. And
Yeah.
back in when we were in it, and I think you started even before I did. In those years, it was just just Midas touch, right? Everything was like the
Hmm.
tide was rising, everything, the wind was at your back, and we just had great momentum. Got the big mo. Big momentum, kind of really seeing the power of real estate. A lot of equity made and a lot of gains made. Fast forward, our 2000 or 22, really when they started hiking rates, 22, 3, now early 24. And now it's just this, we're the down cycle, right? In the down cycle is the challenges, but then also the huge opportunities, like
Hmm.
things you're buying, seeing amazing prices we really haven't seen in years and years and years. So yeah, it's just, I think it's the silver lining maybe in the cloud is the huge opportunity that we're seeing now.
Yeah, no, absolutely. Well put. Curious, what cities have you? I know you'd mentioned, I think 7 states total, but what cities have you invested in? Is
Yeah,
it
great
just
question. Yeah, so some of those we're managing with other partners.
Mhm.
So some in Atlanta, aka, unless you really know the ins and outs in Atlanta, do not buy in Atlanta
Mhm.
today. Atlanta, and kind of some of those surrounding cities. What was it? Murfreesboro, South Carolina. And some of these
Mm.
are blanking on. Glendale, Arizona, which is in that Phoenix MSA.
Yep.
Love Arizona, man. That's
Mm.
so, insurance and taxes are are a breeze compared to Texas. And then up in Florida, so we own some land development project, kind of Central Florida, and then manage a project up on the Panhandle. And up on that Panhandle, kind of if you can imagine, from really as you get to the top of it, keep going over to Pensacola, and then if you go Mobile, Alabama, and then Louisiana, that's where it's just very much any hurricanes that kind of gain enough speed momentum, they just keep going and they hit those coasts hard.
Oh no.
So that area, I would encourage you to either have massive reserves if those events happen, or just
Mm,
don't participate in those markets because they're maybe higher risk. Higher risk. So
gotcha.
yeah, that would be kind of in the Carolinas, Georgia, Florida, or Texas, Houston, and Dallas, and
Mhm.
then in Arizona.
Okay, cool. And then what has your role been as a GP, and then what do you like to do?
Yeah, great question. Really a variety. When you get started, you're kind of just you plug in where you can, and maybe that's underwriting, evaluating, looking for deals, finding the opportunities, talking with brokers, putting all the pieces together, putting your insurance and taxes and working with your property management company, really honing in your pro forma, and kind of your where you see the property and potential, looking at all the industry data, the metrics, the CoStar, the Axio, really, and then of course your local boots on the ground knowledge of what's happening in the market. So you're kind of putting this all together, and I actually enjoy that part, and you
Mm.
might relate too, because it's probably more the analytical and the engineering side where you're just like, hey, and we're not making stuff up. This is like
Yeah.
you're putting all these pieces of the puzzle together. You're trying to solve challenges, and both our former engineering lives, we did a lot more complicated work than this. This I think would be simple relatively,
Yep.
and so yeah, just kind of putting those pieces together, and putting opportunities together for our investors. With the upside, in a rising market, you get a lot of great, wind at your back, rising tide. In the downside, hey, the opportunity for investors is to buy at an amazing price that we haven't seen in a long time. So, we get the opportunity to really find and uncover these opportunities, bring them really for our investors to participate in. And so that's a lot of fun too along the way. Stressful, can have challenges, but generally a lot of fun. And then kind of moving forward, I mean, operations. There's definitely challenges with it, and there's certain things we learn along the way of what we want to focus more on, what type of asset classes, what type of properties we want to do more of, and then more importantly, what ones we do not want to do of. We do
Mhm.
not want to do the ones where you get your war wounds and your battle scars.
Yep.
So
Yep.
so I know it's a long-winded response to really, yeah, I think today is such a great time in the market to be able to come and buy and see deals that you haven't seen in a long time. It's just to be able to figure out the challenges and ride through it.
Awesome. Is yeah, I think well put. I think I know when so I got going in 2012, and it's interesting. There were at that time, kind of 12, 13, 14, the mindset was we have to be super conservative. Like, everybody kept thinking the Great Recession was going to reoccur again, was going to come right back. And then obviously did not. I guess kind of in different forms or fashions, maybe, but with COVID. But yeah, just super interesting to, I saw some people that around that time bought, some people bought everything under the sun, everything they could, and others, anyways. But yeah, and it's been interesting, kind of in 19, 20, and 21. Yeah, I think you started to see, because that market, that run lasted so long. I think kind of towards the end, you started to see, a few people maybe, started to put pencils down and all that. And then we saw even more people put pencils down during COVID. And then I think everybody, It felt like jumped in, 21 and early 22, and now we're seeing some people, put their pencils down or back off. But it feels like in 24 they've kind of perked back up again. So yeah, it'll be super interesting just to kind of see how the rest of this year unfolds with rates and all that fun stuff. So, um, anyways, there, as if an LP goes to a few conferences, you can probably get on, people's list pretty quickly and all that. Then you're like, well, who do I choose? Who do I go with? And so, is there anything that you guys do to kind of set yourself apart, from some other syndicators or just other, multifamily operators?
Yeah, yeah, no, great question. I mean, I think our style is more of a fundamental basis. We really try to work from the ground up of finding the opportunity, and
Mhm.
uncovering flipping over a lot of rocks, right?
Yep.
To really find where we can see great opportunity for our investors to be able to make money. And so that's really the thesis in what we do from a ground zero perspective, building up, and really even everything when we underwrite a property and we're looking at the opportunities, we're really looking at the physical comps, and I
Mhm.
believe, I know we do, we have that same thing in common. We're looking at the physical comps and we're looking at what is already proven out. Hey, the
Right.
neighbors, these three neighbors have already done that to their property. We can do the same to hit that level, right? So not necessarily trying to be pioneers in the space, but really more of a fundamental approach to what we can do to our property to achieve kind of what's already been proven around us. So I would say that's definitely part of it. And then I mean, just open, transparent. Right? There's a lot of we treat others the way that we want to be treated, and so our investors are smart and intelligent people, and so just being open and transparent about issues or challenges as they come up, and kind of what we're doing to tackle them. So that those things I would say have been key, and then that helps our investors tell their friends, and kind of grow more naturally that way. So
Gotcha. Yeah. Awesome. And what does your deal box look like, or what are you looking for in a deal?
yeah, great question. And I think that's kind of constantly being refined more and more,
Mhm.
right?
Yeah.
At the beginning, you're kind of like, okay, 80 units plus. I like probably B or C, multifamily. I want at least 40,000 median household income, um, and no flood zone, right? So that's
Hmm.
kind of where we started. First, I guess you look at the market, right, and the city. Is your city, are the fundamentals strong? Are people moving there? Are jobs being created there? Those two key factors are really what helps the trajectory of your supply and demand, and
Hmm.
what's happening in your multifamily properties. So once you have your city, and then now you're zooming down into where in the city those opportunities, where do those kind of meet the metrics we want to go. I would say even more so, we're really filtering and really kind of looking at, now we look huge at bad debt. Kind of what is the
Hmm.
property, what is the poverty in that specific area, and so really looking at kind of what has the bad debt been in the last 12 months on the property, and if it's a problem, you
Right.
may be able to solve that property, but maybe it's more of a submarket issue. So drilling in that, we like to see higher household income, and probably more migrating to the A's and the B's rather than the C's. C's was kind of you kind of, hey, it's a workforce housing, right? If they're not living in your apartment, unfortunately, they're probably living under a bridge. So there's not
Yeah.
really that next step down, right? And so it really was that kind of the basic for providing beautiful, safe space for our residents and our communities. Um, so yeah, now I would say really like to stick in that 60,000, median household income plus, probably the A's and the B's, probably 100 units, maybe to 300 units. And Yeah, I love to see positive leverage day one. So for the listeners that aren't quite as familiar with that, it's like if your debt rate is 6% and you're buying at a 6.5%, then you're positive, right? You have more money coming in than it costs you on your debt. So your
Yep.
property supports itself just as it is, and then anything you do to it is icing on the cake. So that's what we like to see. But sometimes the deeper the value add, then the more opportunities there are for a higher return, because you do a lot more work to get there. And
Right.
so really it's we just kind of look at a lot of those deals, but avoiding flood zones still.
Yeah. Yeah.
And yeah, yeah, really like to get yeah, away from the coast a little bit more, because
Hmm.
insurance is quite variable, especially here in Florida.
Yeah. Yeah. I can only imagine for sure. I know I'm sure you talked to a lot of LPs, passive investors, and one question I always thought was pretty interesting, and I've gotten this a handful of times, and you may have as well. And I remember the question is, what should I be asking you about, on this, whatever deal it is. So I'm going to ask you the same thing. What should an LP be looking for whenever they're looking at a one of your deals?
Yeah, I mean, you really want to look at people's track record. Kind of
Hmm.
what have they done in the past? What have they done full cycle? Ideally, full cycle means they bought, operated, sold. How have
Hmm.
those gone? Um, and hey, what challenges have they come in? They come across? And more importantly, what have they learned from that? Right? We're all going to have challenges. The more units you have, the more challenges you're going to have. And so,
Yeah.
so we don't lose our hair for no reason.
Yeah.
So what have we learned through that whole process, right? And making sure that they're learning, growing, and it's definitely a continual journey that we're all on. So most importantly, kind of, yeah, well, how are we learning? How are we growing? How are we adapting to all the change that's happening, and making sure that we're staying in front of it. And in some of your communities, you really got to understand your demographic. Okay, in those properties you own, who
Hmm.
are you serving? And who are the people that you really need to be catering to, targeting to, providing for their needs? And I think once you're able to do that, then that is a massive step in the right direction.
Yep. Yep. That's yeah. It's funny. I don't know. Just kind of outsider looking in, and you go to a few conferences, and you're like, oh, it's rainbows and unicorns all the time, right? So on the operation side, and
Oh
so
yeah,
yeah,
and they're like,
keeping
oh,
your
that's so easy, I can do that. And then you're like,
yeah, yeah,
careful what you
yeah.
wish for.
You manage the manager. It's no problem. There's no drama. So, but problem is, you're working with lots and lots of people. So,
Yeah,
and there's always there can be challenges with that. So, but
yeah,
I there's definitely some things I really enjoy about multifamily, and you've kind of touched on some of those as well. And then there's some that maybe I'm not the biggest fan of, but you gotta do it. Like we just kind of basically wrapped up K1s. We're still doing some address changes and things like that. But for the most part, kind of have that wrapped up. That's definitely not something super enjoy. But then on the flip side, I really like what it does for my tax situation. So I do really enjoy that. But so for you, Brent, is there some stuff you really enjoy? Maybe something you not don't really care for as much. But yeah, I'd love to kind of see where your head's at and kind of what you like doing.
yeah. And I mean, I think you hit on just one thing right before we jump into that. The tax, that's a huge advantage of real estate.
Mhm.
And if people don't understand that, make sure you connect with Dustin, and really understand kind of, hey, how can you take advantage of this, what we call depreciation, and how can you use that to help you mitigate taxes? Obviously, talk with your tax professional. We can help guide you in the right direction if your tax professional doesn't understand or know that. But this is one of the massive benefits to multifamily investing is the tax mitigation. But yeah, I mean, what do I not like? What I like least? Um, right now, I mean, there's unfortunately a very, very big uptick in fraudulent
Mhm.
tenants.
Yeah.
Whether it's their fake pay stub, fake ID, fake socials, and and
They're they're getting good too.
they're getting really good, right? So then we
Yeah.
got to get better.
Yeah.
And
Yep.
unfortunately, that's this, because it's not like you just, okay, if you miss it, then often they still have same bad habits, right? So now 2, 3
Yep.
months in, they're not paying their rent, and you're just like, you just
Yep.
moved in. What happened? So
Right.
really, yeah, fraudulent IDs, delinquencies. That is one of the parts, and unfortunately, crime. Right.
Right.
Um,
Yeah.
yeah, making it a safe space, safe community. But as an operator, you do have things that come up and things you got to deal with from that. So
Yep. Yep. Absolutely. And kind of going back to the beginning of your journey, and interested to hear kind of what that looks like now for you. But are you part of a mentoring programs that kind of you started out, and then are you in mentoring programs now or coaching programs? Just interested to hear about your journey.
yeah, for sure. Yeah, back 2017, joined Brad Sumrock's group, based in Dallas, Texas, and that's where we connected through,
Mhm.
and had the fortune of connecting with yourself. And yeah, still actively part of that group. Was in a mastermind with that. Do some Tony Robbins programs.
Mm.
He's got a really great business mastery program and some others. So yeah, those would be probably the main ones. And yeah, just kind of in definitely a good ecosystem of
Yeah.
I think that's such an important thing. So you're not in your own silo by yourself, but you're like
Mhm.
constantly being aware of what's happening in the industry, the changes around us, and so you can be prepared for it and stay on top of it.
Awesome. Yeah, I think it's really important to, especially at the beginning, but I think it's always everyone's always learning, and if you stop learning, like, you're not you're it's not you may not be around too long. So it's everything's always changing, like you'd mentioned, fraudulent, some of that stuff has gone up, and so you had to pivot a little bit, and in there, maybe kind of up your game on at least we did on kind of some of that. But I guess kind of changing gears a little bit, do you have any favorite books or podcasts? And then if there's any books or podcasts that if you listen to or read more than once, I'd be super interested in that.
Yeah, I mean, obviously, Dustin, what you're creating here is a good start. Real estate radio guys, I love their stuff. Been listening to it from 2016, and so
Oh
just
wow.
a really good, well, diverse perspective and background on a lot of things happening in impacting the market. So
Hmm.
those are great podcasts. I love books. Two books, highly recommend. Benjamin Hardy and Dan Sullivan. Dan Sullivan's the one that created Strategic Coach,
Hmm.
and they have The Gap in the Gain. Love that book. Listened to it
Yeah.
actually multiple times. And by read, I
Oh,
mean I
cool.
audioed it. But
Hmm.
yeah, that was good. And then Who Not How. Both of those, just honestly, I love them. They were just, as an entrepreneur, they just really, really grabbed me. And then they have the 10x, not 2x, which I have in my queue, but I have not started yet. So, but The Gap in the Gain and the Who Not How, those ones, some of my favorite books.
Gotcha. Awesome. I know Dan Sullivan, he's Canadian. Is Darren Hardy also?
Well, actually, Dan Sullivan, I think he married his wife from Toronto. I believe that
Oh,
was the
okay.
connection. But
Oh, okay.
I could be Canadian, but for sure his
Okay.
wife's Canadian.
Okay.
Um,
Gotcha.
yes, and then
Yeah.
And then Benjamin Hardy. I can't remember where he's from, but
Okay. I was
yeah,
just curious.
yeah.
Uh, and then where, how do you see 2024, kind of shaping up for you, and then if you want to take a stab at what that looks like maybe later on the road, a few years, 5 years out. Just curious what you kind of see for yourself, for your company, and your growth.
Awesome, man. Awesome. Love it. Yeah, so I think we're in a golden age of buying. I think we're going to see a lot of huge opportunities that are going to constantly go by, right? And so you got to be
Mhm.
prepared, be ready on it, and ready to take them, ready to buy. So we're definitely bullish buying right now and actively looking for new opportunities. And then, I think a lot of this journey in life is really finding great people to partner with and do projects with. And so,
Yeah.
we're definitely going to continue to grow and build and hire and build the team. And so, yeah, looking forward to many more years ahead in the multifamily journey.
Awesome. And kind of lastly, any advice for someone looking to be a GP? I'm sure you have people are like, "Hey, Brent, how do I get going?" So just curious if you have any advice for those folks.
Yeah, really, that you kind of can get the opportunity, right?
Sure.
Find gentlemen like Dustin, or let's connect afterwards, and then see opportunities. Hey, maybe there's an opportunity to kind of like what they call, as an LP, I'm going to invest with them. I'm going to learn the ropes a little bit. I'm going to see what it's like. It's like you're sitting in the back seat almost, and you get the view, or
Yep.
you're on the tour bus, right? And they're the tour guide. Next step was really like, hey, I'm really interested in this. I think I'd want to do it. And you're learning the ropes still, but maybe you're as a co-GP or something, right? And kind of partnering with somebody that's more experienced, has been down the road. And then you really get a good full gamut of, okay, I like that area of the business. I do not like that area of the business. Okay,
Yep.
I'm good at this
Yep.
area. And you can kind of see where you really want to double down in before before jumping in. So I would recommend that. And it's kind of like an apprentice, right? In
Yeah.
any business and in an industry, almost going and becoming an apprentice so you can really learn. So I say that that's a key element, key step.
Awesome. Well, really appreciate your time. Always great seeing you. And how do people get in touch with you and be able to ask questions or just potentially invest with you? How do they get a hold of you?
Awesome. Yeah, they could reach me at Brent, Brent, at enrich, ENRITCH, investments.com, or check out our website, enrichinvestments.com. There's a contact information they can complete there, and that would be the best way.
Awesome. Well, really appreciate your time. Everyone, please reach out to Brent. Super nice guy, as you can tell. And again, Brent, really appreciate your time and have a great day. See ya.
Awesome.
Thank you.
Thank you.
Bye.
Bye.